Hi, everybody. I'm Anna with the Wall Street Journal. I'm really excited to be here for this topic. It's one that's very close to my heart. And after this sweltering summer with new records set for heat, where we've seen unusual weather everywhere from wildfires in places like Greece and Canada, and a rainy Burning Man, I think we can all agree that climate change should be at the very top of the agenda. But is it? Of course, we've had times with the highest inflation we've seen in decades, which has led to the highest interest rates also in decades. So I'm wondering to what extent, at the top of companies and at the top of governments, how much are we still focused on climate change? And I'd like to start with a question to the audience. Can everybody show me with a raise of hands? Are you in camp 1 or 2? Camp 1, do you think that climate change is still at the very top of the agenda? What do you think? And Camp 2, do you think that the focus has maybe shifted a little bit with all these distractions that I just mentioned? Well, let's see what the esteemed panel thinks as well. First, we have Lucas Joppa, who is at Haveli Investments. Would you like to introduce yourself?
Hi, everybody. Thanks so much for the opportunity to be here and talk about climate. And if you think it's not on the top of the agenda, to help you put it right back at the top. I'm Lucas Joppa. I'm a Senior Managing Director and Chief Sustainability Officer at Haveli Investments, a software private equity firm. Before that was the first Chief Environmental Officer for Microsoft.
Next, we have Zoisa Northbond.
My name is Zoisa. Very nice to see you all. I am the CEO of Octopus Energy Generation. Octopus is one of the only tech energy disruptors that operates at global level. We serve around 5 million customers here in the UK, and also a further 30 million use our platform around the world. And we are working very hard to put renewables at the same cost as fossil fuels for customers to use.
And to your far left, we have Adam Elman.
Good morning, everyone. Adam Elman. I lead sustainability for Google across Europe, Middle East, and Africa. But I've been in sustainability for coming up to 2 decades, previously at Amazon and Marks & Spencer.
So let's start our discussion with a question for Adam. We've had some recent examples of companies like BlackRock and Vanguard, some of the biggest investors in the world, taking a step back from ESG and climate advocacy. Adam, what do you think is the role of large companies and investors in the fight against climate change?
Thanks for the question. I think let's start with the science, which is very clear. We've got till 2030 to chart a new path to a more sustainable planet if we want to avoid the impacts of climate change. Now, this was reiterated last week. The UN's Global Stocktake First report came out to say we're not moving fast enough and we're not doing enough. That said, over the last 5 to 10 years, there's been significant improvements in terms of the policy agenda, particularly here in Europe, but increasingly in the US and other parts of the world, and also on the corporate agenda as well in terms of setting ambitious targets and driving towards that. And I think policy and that corporate ambition is really key to this. And when it comes to large companies, I think there are 2 ways in particular where this is really important. Firstly, by sending signals, demand signals to the policymakers that this is important and we need them to set strong, ambitious policy agendas, but also sending signals to those in the market that are developing the new products and services we need for a more sustainable future. But then secondly, actually in developing those solutions yourselves and driving towards those ambitions. Google's sustainability has been a core value since the company was founded 25 years ago. And there are 2 core ways we think about leading on this agenda. Firstly, by making information accessible. People, businesses, organizations, governments turn to Google for quality information to help them make choices for a more sustainable future. So whether that's through Google Maps, Google Search, Google Cloud, we're increasingly finding ways to help them with that information they need. And then through our deep legacy and research and the innovations and breakthroughs we're making in artificial intelligence, we're finding new ways to make that information accessible and more powerful tools to help in the fight against climate. And so just to bring it back and to finish with those sort of examples I gave earlier about sending signals and taking action, I think we'll come on to some of the solutions a bit later. But in terms of sending signals, one example is on carbon removals. We think carbon removals are really key to the net zero future we need, but it's a nascent technology. The volumes aren't there, the quality is not there, and the price is too high. So we, along with a number of other businesses, stole an idea from the pharmaceutical sector around advanced market commitments. So we and a number of other businesses collectively put together $1 billion. We've put in 200 million to send a signal to the carbon removal sector to say, we want to buy, we've got the money here, if you can meet certain standards, we're a buyer. And that's really helping to spur on that market. So it's just one example. I can think of many others.
But do you get the sense that these initiatives are helping the bottom line? How do you balance the company's growth targets with its sustainability targets?
Well, I think I'd start by going back to my point earlier about the science here. And I think the question is, what is the business case of not taking action? And certainly for a company like Google, we don't do this because it's a business case. We do it because fundamentally it's the right thing to do. That said, there is a strong business case. We, as I say, we see it from our customers, be it individuals or companies who are looking to us to provide solutions. We see it from employees who want to work for companies that have a purpose and take this very seriously. And of course, regulators and shareholders are demanding it. And of course, there are actually financial opportunities here in terms of direct to the bottom line on things like efficiency. Google started investing in renewable energy back in 2010. It's the cheapest, lowest cost access to energy. It's a key part of our cost base. It's helping us save money. Why wouldn't we do it?
Lucas, I'd love to hear a bit about this from the private equity perspective. How do you think we can re-engineer companies to be simultaneously more profitable and more sustainable?
Yeah, it's an interesting question. I think a lot of times people didn't see a big role for private equity in this space in the past few decades, but now, by and large, I would say that the sector as a whole sees a big opportunity. I think one of the things that I've learned in my career in sustainability is that it's kind of a whole of organization thing that needs to happen. You need kind of sustainability to hit the engineering, the procurement, the finance, the marketing, the employee resource groups, kind of everything everywhere all at once. And when you think about how the world needs to approach net zero, this removal of carbon from our economy or the decarbonization of our global economy, I think the normalization of net zero is what we need to move towards, and private equity can help us do that by having operating control over a whole portfolio of companies, so that we can go from the Googles, the Microsofts, the Amazons that really are out there leading the charge, sending the signals, helping to make the market. We can take the leadership that those highly abnormal companies are showing, and we can start to normalize it down into the upper mid-market and mid-market companies. And you can do that, I think, really by focusing on the opportunities, the profit-making side of what decarbonization provides. So there's a lot of companies out there that are trying to mature by bringing new decarbonization solutions into the market. And there's a lot of companies that are facing kind of existential threats from the need for their business models to change as we move into this new economic structure. Private equity provides kind of the resources and the structure outside of kind of that public scrutiny for those big management changes that need to occur. And so I just think that there's a lot of significant investment, maturity, and management kind of nuance that needs to happen over the next decade or two. And private equity, for the first time, is starting to bring the playbooks that it has to bear on sustainability. And I think we're going to see the fruits of that labor borne out over the next 1 to 2 decades.
I'm glad that you brought up normalization. I mean, how normalized is it to speak about climate change and ESG and sustainability among your investors, in the boardrooms, on roadshows? Is it something that's still very much at the top of the agenda?
I definitely think it's still at the top of the agenda. I think the fact is climate is everything. And so if you're talking about policy, if you're talking about procurement, if you're talking about customers and supply chains, it's hard to get away from all of the extreme weather events that you've been talking about. It's hard to get away from the natural resources and ecosystem services that nature provides into the economic systems. And so it's just really hard to have a conversation about the economy without also having a conversation about the environment. And so that fact has, and then the criticality of the conversation has really brought climate into the forefront. Now, you mentioned, firms moving away, et cetera. I think that that's just a little bit of a rebalancing because, nothing can ever be the top spot all the time. Like, we have to have a mix of priorities. And so, sustainability had this massive, rise in public consciousness. And then there was a little bit of reckoning about, okay, what do we need to do to actually make this happen? There is some pushback. I think that's all normal. I don't think any of this is going away. I think that we may change the structure, the way that we talk about this stuff. I think, BlackRock comments were interesting of like, we're not using the term ESG anymore, but that doesn't mean that we're not doing this stuff. And I think that that's probably, the nuance that you'll see in the markets going forward is people may like or dislike one particular structure for how we think about sustainability more or less over time, but I don't think sustainability itself is going anywhere.
And let's get to the heart of how we need to make this happen, which is very much linked to the energy system. And Zoisa can take us through this. Do you think that our energy systems are moving towards decarbonization as quickly as they need to be for us to meet our net zero goals?
I would say that we've come such a long way quickly, but there is just so much more to do. And I say that looking back over a career that's probably so far spanned about nearly 2 decades in the energy industry. And looking at the UK, for instance, 20 years ago, it was about trying to solve an energy trilemma, which was about decarbonisation, it was about affordability, and it was about security. I think we had an amazing wave of work and models that flowed into the market with on and offshore wind and solar, and of course there was a lot of societal support for that. I think standing back and we see what's happened over the last 2 years to 18 months, and of course with the terrible situation in the Ukraine and what was then caused as a result, it's shown that society is way too dependent on gas. Although we've had amazing headlines even in the last kind of 2 years where we go for periods at a time where fossil fuels don't actually feature in our energy mix at all. You have things like wind overtook gas for the first time in terms of production, which was amazing this quarter. It still just isn't enough. We are still seeing high bills for industry, high bills for households, and that's extremely difficult. And this is all going on in the global north before we even get to the global south, where actually it is underfunded. I think the mindset totally needs to change because we're almost trying to adopt models that work in certain countries and certain economies to fit a very, very different problem. So in short, we've come a long way, but not quickly enough. What businesses like ours, thankfully, are doing is coming up with the innovation and the ability to move things much, much faster. Octopus Energy, we're only 6 years old. And we've come an awful long way in that time. So through our technology platform, we can provide customers with excellent customer service, but actually energy at lower cost, which means actually that green energy begins to make sense. We also provide things like grid-friendly tariffs. So if you're prepared to, if you're a household that has an electric vehicle, for instance, or you're prepared to follow price signals coming from the market. So when the wind is really blowing and the sun is really shining, then we can tell customers, use energy now. There's an abundance of renewables flowing through the grid. It's going to make sense to kind of turn on, charge your car, do whatever you need to around your household. You'll get cheaper energy as a result. We have the abilities to do that now, and it's something that we hope not only to bring to more countries around the world, we're in 18 currently, but also begin to look at that global south problem and begin to try and tackle some of the things there.
Yeah, no, that's really interesting. But of course, I mean, inflation is being felt everywhere. driven by commodity prices. It's made things like wind turbines and batteries and other kinds of renewable energy equipment more expensive. How is your business dealing with this?
Yeah. So what we look to do is work with customers as much as we possibly can. So I think customers can help so much in making sure that across the chain you can drive costs down and make the electrons cheaper for them to use. So we link our platform Kraken up to things in home systems like batteries, solar panels, and together with smart tariffs, we get the ability to send price signals that ultimately deliver cheaper energy to them. More widely across the supply chain, I think what we're seeing currently is a bit of a short-term issue. I mean, it is almost a perfect storm for renewables from the perspective of high inflation, which hopefully we're at, I think the Bank of England was saying last week, has reached its peak. But we've seen that. We've seen, obviously, rising costs in solar panels and materials. But this actually is something I think that is short-term and it will work itself out.
Let's broaden this question out a bit. I'd love to hear from the rest of the panel. How is sustainability being impacted by higher costs, both inflation, higher interest rates? How are your companies able to balance your sustainability goals with these higher costs?
I'm happy to jump in. And I think I should say, big plug for Octopus. I'm a customer and really appreciate the innovations there. But no, I think, look, there are some challenges and some headwinds. But I think that sort of forces the innovation. And again, I think organizations like Google and other big businesses and Octopus, it really forces us to think about innovation. How can we still drive to the net zero future we need, but figure out a way of doing that? And as Zoisa said, on the energy side, it's a great example where actually the inflation's actually making the business case for renewables even stronger. So I think we're relentless in terms of what we're aiming for and why we're doing it. We need to, and this is what businesses are good at doing, innovating and figuring out a way to do it. So how do we innovate? Certainly on the Google side, how do we come up with the technology to enable the net zero future, and ideally in a way which actually has a net positive business case?
Lucas, what do you think?
Yeah, I would just say that, inflation's up, cost of goods and services is up, cost of capital's up, but it's still nowhere near the level of the cost of doing nothing. And I think that's something that we heard about already today. And, strong business leaders understand, that the world exists beyond just the next quarter that they're reporting results for. And I think, the costs are pretty well known. We're starting to grow some corporate competency in things like real or at least shadow carbon prices inside of organizations so that we can understand the future cost of the business decisions that we're making today. So I think that there's actually mechanisms inside companies that can help bake this kind of perspective on what the long-term cost of capital is actually going to be. The second thing I would just highlight that I actually think is a good thing that Adam just talked about, which is innovation. I think that a lot of people really just thought that they were going to be able to buy their way out of this problem, that they were just going to be able to go and buy, carbon offsets, et cetera, et cetera. Now, I do think that things like carbon removal are going to play a very significant role in our net zero journey. Obviously, renewables is going to be at the absolute center of it. But you can't buy your way out. You've got to go and actually innovate new products, new business solutions, and new business models. And so when the cost of goods and services and cost of capital is low, there's an incentive to just, if you already think you can buy your way out of it, to just buy your way out of it. Now that that's a little bit higher, people are forced to have to, yes, do the hard thing, but it's ultimately the right sustainable thing long term. So I agree that on the supply chain and issues that we're seeing, a lot of that is going to get sorted out. But I actually think this is a good forcing mechanism for people to do the right thing.
On innovation, what is the role of AI in this? In the fight against climate change. I'd love to hear some examples from the three of you, what your companies are doing in AI and climate.
Should I go? So we've begun this year to use AI across the business and specifically looking at areas of the business which in the past maybe aren't the most enjoyable for humans. So, for instance, replying to certain customer emails. And it's been absolutely extraordinary in that we've seen it can do the job of 250 people in our organization. And not only that, it can do it to greater satisfaction levels than human beings. So I think we had an 80% customer satisfaction level. And of course, what that enables us to do is free up people to think differently, to innovate and create different models and focus on different things versus, I suppose, some of those things which were very manual and tied things up in the past. So taking that kind of principle and those types of people, we've been able to create much more innovation. So, for instance, solving problems here in the UK with trying to introduce new renewables, such as onshore wind, and using the people with the mindsets which were doing those jobs to come up with ideas like our fan club, where we have 2 turbines and communities living around them, and they get 50% off their energy bills when the wind blows. Not only that, they were extremely interested in it. We had 20,000 communities from across the UK write to us wanting us to build wind farms in their back gardens. So we ended up with lots of data and lots of information that we thought, well, what can we do here to kind of help with this attitude that wind isn't welcome to build in the UK. So we came up with a new data platform which is called Winder, or Tinder for Wind, where we match-make communities, so communities that want wind with wind turbines. And actually, it went from being something that we were doing internally as a project to then pushing government into reviewing the way that that policy had been created around not being able to create new wind farms. And actually, just last week, Tinder was described as a novel approach, but one that was absolutely welcome as the wind ban was lifted, so that we could build more wind, which is obviously cheaper, cleaner, and more secure for people. So AI has had a huge effect in our business in terms of freeing people up to really be able to focus on the things that really matter and can make a difference.
Adam, what about at Google?
And I think just maybe taking a step back for a second and thinking about the role of technology more generally, and there's a lot of research out there. We commissioned some last year, but World Economic Forum, Accenture, and others have put out as well. But we looked at the EU's net zero 2050 target, and the insight shows that 20 to 25% of the decarbonisation required, it will require some form of digital enablement. So it's a huge opportunity here in terms of the net zero future. At Google, we've actually been an AI-first company since 2016. So although lots of people are talking about it now, we've been involved with AI for a long time, particularly in the sustainability space. And I'll give you 3 examples that align with our sort of 3 pillars of our strategy. So first of all, how we empower individuals. So many of you hopefully will use Google Maps. Google Maps for many years has helped you figure out how to walk somewhere, how to cycle somewhere, giving you information about what public transport's available. In more recent years, we've added things like EV charging points or where bike and scooter hiring is available. But we felt there was an opportunity to use AI to help drivers. And we introduced last year in Europe something called fuel-efficient routing. It uses AI to take multiple data sources and will serve up the most fuel-efficient route if it's not already the fastest route. So it might come up and say there's an alternative route. It may be, 3 minutes slower, but could save you 15% in fuel. As of the end of last year, that had collectively saved or avoided 1.2 million metric tons of CO2. That's the equivalent of taking 250,000 fuel-based cars off the road. So a real example of how we're helping people every day. In terms of helping partners, one example is our recent work with the airline industry. So actually, about 35% of the global warming potential of aviation comes from contrails. Those are the little thin clouds you often see at the back of airplanes. And we've been using AI to help figure out how you can avoid contrails. We've partnered with Breakthrough Energy and American Airlines, and the first 6 months of this year, we ran over 70 test flights with them, and we were able to reduce contrails by 54% using AI technology. So again, a huge impact, and actually relatively low-cost one for a huge impact. And the final example I'll give is in terms of our own operations. Obviously, all the work we do can only really be feasible if we're running sustainably ourselves. Speaking about renewable energy, I mentioned before, we've been focused on this a long time. We've been matching since 2016, 2017, our electricity use with renewables at the end of the, on a global basis at the end of the year. But that still means at certain times of the day in certain parts of the world, we're still reliant on what's on the grid. And we're not happy about that. And we want to shift to something called 24/7 carbon-free energy, sourcing clean energy every hour of every day locally. And it's a big, ambitious goal and requires a lot of new technology, but also requires us to think about how we can use the best of the clean energy that's already on the grid. So we use an AI carbon load sensing application that looks on a daily basis over what jobs are we going to need to run in our data centers, what clean energy is going to be available on the grid, and the AI solution automatically moves jobs around, so we're running those jobs where the grid is the cleanest. So 3 real-world examples of how we're using technology today.
Great. So we've got just a few more minutes left, and I've got one question I'd love to go through all 3 panelists with. So I'd love to hear from each of you. What is the biggest sustainability-related opportunity and the biggest sustainability-related challenge that you see currently? And what is your strategy for seizing or overcoming the opportunity or challenge? Lucas, why don't we start with you?
Well, I played that last round perfectly because that means I won a bet with myself that I'm going to get out of CogX without talking about AI. So I'm excited. I think the biggest opportunity from a sustainability perspective, I believe in the short term, is around procurement. I believe there's already signals being sent out into the market, whether by Google or Microsoft or Amazon or choose your other sector as well, that there are procurement preferences for decarbonized solutions. And that includes decarbonized software solutions, that includes hard solutions like concrete, steel, etc. There's a willingness to pay what Bill Gates calls the green premium of decarbonized solutions. And I think that that's a huge opportunity that companies aren't taking enough advantage of at the moment. I would say the biggest difficulty, quite frankly, is still education. I still find that people aren't as fully aware of the ramifications of their business. Many people are aware of the ramifications of extreme weather, the fact that it's hotter this summer than last summer, etc. But then when you go into the boardroom, they haven't really made that kind of logical leap yet to connect those two things. I think that that's just kind of a bit of a waiting game. That education is almost inevitable, but over the next 2 years, I would say the biggest opportunity is preferred procurement for decarbonized solutions, and the biggest obstacle is still a lack of education in the boardroom.
Great. Zoisa, what do you think?
I think the biggest opportunity is the way that we can listen and amplify what we can find out from customers. I think they really can help drive change, but also enable us to create new models. And we've certainly seen that across Octopus with combining technology with what customers want has created some of the most amazing things. I think the challenge is simple, and it's actually not being able to go fast enough and is creating the pace and speed that we need to decarbonize and meet net zero in energy as fast as we possibly can.
Great. And Adam?
I think starting with the challenge, and building on what was just said, I think it's about scale and pace here, right? This is, we can't have small-scale pilots, happening, every other Tuesday. We need to really scale up this stuff, and we need to do it fast. The good news is we already have the solutions we need, and the IPCC said this in their last report. It's about scaling them up. And I think, the opportunity, it would be easy for me to talk about technology, but I actually think the opportunity here is about partnership and collaboration. We all work for big businesses. None of us are big enough to do this on our own. It's how we can partner together and how we can collaborate to scale up the solutions needed. When Lucas was at Microsoft, Google and Microsoft collaborated on many things because we all see the benefits for all of us of going faster. So I think it's finding those ways to collaborate for everyone to be successful.
Perfect. Well, thank you all so much for listening. Really appreciate your time. And thank you to all our panelists.